4 hours from now, we should expect to see announcements from the banks about their buyback and dividend plans. Ceilings for capital distributions are set by the Fed, which released its stress test last week, showing all 33 banks it tested faring relatively well with an overall healthy financial system. However, analysts point to a few surprises that could be in store, especially among the larger banks, which could lead to materially lower buybacks this year. That camp, analysts expect, include Bank of America, Citigroup, and JP Morgan. Wells Fargo's results, on the other hand, could point to modestly better distributions, analysts say. The market isn't anticipating further restrictions from the Fed as it did during the pandemic and curbing buybacks and dividends. However, bank managements could opt to be more conservative due to the rising expectations of a recession. But as we've seen in recent weeks, C-suites among the big banks are divided over the prospects of a big downturn, with JP Morgan's Jamie Dimon warning of a hurricane on one hand, while others like Morgan Stanley's James Gorman more sanguine, Frank.
Yeah, a lot of tea leaves out here that people are reading. But just back to the banks very quickly, what are you expecting when it comes to buybacks? I know in 2020, those buybacks were halted. Last year, big jump. Are you expecting another jump? The state at the same level? What do you see coming?
No, it's a good question. So the Fed's test was actually harder this year than it was last year. And so as a result, a lot of analysts, especially among those names that I mentioned, are expecting pretty materially lower buybacks this year. And then you could see on top of that, bank management say, you know what, we want to protect our balance sheets even further. So we're going to kind of be pretty conservative with those buybacks just in case some of these significant headwinds that are out there do turn out to be a recession. We want to make sure we're in a good place from our balance sheet standpoint in order to withstand that ahead of time.
All right, significant headwinds. That sounds like Steve Weiss's cue. Weiss, you own Bank of America and Goldman. What do you think?
I do. Look, I mean, Jamie Dimon came out and said, essentially prepare for the worst. So do you think he's then going to go out and buy as much stock, even though his stock is cheaper? I don't think so. You know, I was talking to one of the heads of banking of investment banking at one of the larger firms, and I was told that their revenues are running down 85% in capital markets. Put it in perspective, that's some of their highest margin business. So given that that's occurring and the capital markets are now freezing on the private side, which typically lags the public side by 6 to 8 months, I would say that there's very little chance that banks come out and raise their buyouts. I would look for them to lower them and also lower any dividend increases. It just makes common sense. What's the rush?